We're joined by Kian Soon, his CEO and fund manager of Astral Asset Management, joining us from Singapore. Good morning, Kian Soon. So the focus today is really on the geopolitical uncertainty given Russia's invasion of Ukraine. What do you think will be the impact for us here in Asia at a time when commodity prices are up, inflation is up, and supply chains are already facing disruptions?
For a situation like geopolitical tensions arising, I think the immediate reactions from the market will be market volatility, as we have seen from yesterday, sell down to recovery today, and we are most likely going to continue seeing this trend happening, as the situation unfolds. I think the whole market is watching very closely on sanctions imposed by the West, and so far, as long as there's no sanctions on the energy markets, given that 40% of energy sources of Europe is derived from and dependent on Russians, I think there will not be wild swings that we have seen. We've seen oil prices surging above $100 per barrel, coming down to a more reasonable price the moment that the markets noted that there's no sanctions on Russian energy.
Yes, given the uncertainty that we are seeing on this front, plus the higher inflation and the lower economic growth that we've seen, what should investors do now? And do you think this will put an end to the bull market that we saw on Wall Street?
I think the United States key markets have a very good run for the last 3 to 4 years, given that there's low interest rates, there is tremendous, hot money going into the market, so valuations has already gone up a fair bit. And as we approach 2022, with the global economy still recovering from the pandemic, it's very interesting to note that the high recovery from last year is no longer a given. And hence, for this year, the economic recovery is going to be more subtle. On top of that, you have the pressures from rising costs, as well as shortage of energy, supplies, etc. You're going to trigger, more pressure on businesses, and therefore you're going to see declining profit margins as business cope with rising costs, as well as labor and manual shortages, etc. So this year is going to be a rather tricky year for the markets, because I think that the rising tide is no longer a given, and hence, businesses will be more exposed to more challenging conditions going forward.
Yeah, so tricky for the markets, but also tricky for global central banks, because this complicates their goals of trying to move away from pandemic-era support measures to tame inflation. Do you think the U.S. Federal Reserve, for example, and other key central bankers will take this geopolitical uncertainty in consideration and the market volatility that we've seen so far to, I guess, be less aggressive in their tightening?
Definitely, I think the Fed has been communicating actively to the markets in terms of expectations for interest rate rising in this year as a result of inflation. I think the initial responses where everybody expect the interest rates to rise, 5 to 7 times, as well as, maybe even 0.5% in March, would need to be relooked at. I think it's very likely that Fed is going to, adopt a more wait-and-see attitude. There will be an interest rate rise in March, but probably at 0.25%. And then we see where we go from there, given there's geopolitical tensions, given there were a lot of unexpected developments in the coming months. But Fed has many options available. In a way, they control the frequency of interest rate rise as well as the quantum of interest rate rises. At the present moment, I think, investors no longer expect the interest rate to stick to zero. It's definitely going to go up, but it's just by how much in the coming months.
Yeah, but given the valuations that we are seeing in the U.S. and the potential falls in stock prices, given the different environment that we're seeing right now, do you think this strengthens the case for Asian stocks?
Interest rates rising definitely have an impact on the fixed income markets. As for equity markets, we definitely see that they have an impact on technology stocks. Not to forget, I think technology stocks have a very good run in the last few years. And in this year alone, 2022, we saw a 10% decline so far for Nasdaq in the first couple of months. I think the investors will be looking into moving into value stocks going forward. And this, in terms of geography, I think Asia offers a good hunting ground for bargain value stocks, because these are good companies that have strong growth, strong profit margins, as well as balance sheet. At the same time, right, was fairly beaten down last year, and hence I think investors and the market will be looking for opportunities as they rebalance their portfolio, moving money to Asia to look for value stocks that offer them a higher margin of safety in this very tense period.
Yeah, a tricky environment, Kian Soon, for investors and the whole world. Thank you so much for your insights today. Kian Soon there, CEO and Fund Manager at Astral Asset Management, joining us from Singapore.